The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. We are back. You can hear the voices almost back, maybe within about one and a half notes of the old regular. Maybe two whole steps there, but getting real close, feeling good. Thank you for all those very nice get well greetings and things like that. I appreciate that. That's very nice. But we're on our way. So let's get to the nitty gritty. Thank you, Steve. 2 great hours. You know, we kicked this show off. TFN has programming right through the session. We've got 9 o'clock. Steve Rhodes comes right in. Most of the time, he had been joined by, it was Steve and Tom, but Tom, of course, is very, very busy, very active, very successfully active, I believe, in putting together his fund, that is the home fund, housing fund, based, the real estate is just picking up like crazy. He picked a beautiful time to go along. His timing is always impeccable. And so that's something you can go to TFNN front page, check it out. So what's important is that we keep giving you program. We all have ideas. We all have spent a lot of time in this business, some more than others, but basically it adds up to an incredible wealth of material. I was listening last night. It was a couple of nights ago I listened in on a conference with the Warden brothers with their technology team. Now, last night I listened to IBD, that was with Bill O'Neill and another guest host. And I have to tell you, what is available here at TFNN, and basically for free. Now, obviously we say for free, but it's a commercial proposition. And the way the whole thing works is that we try to give out as much information as we can, as is put into the techniques that we have. It's for you to garner and take that information and use it to the best of your abilities. It's for you to say, oh man, I thought that was good. That is horrible. I can't use that. Or that was fantastic. And slowly you get little bits of pieces. And I always emphasize, especially in my courses that I teach, the technique must become yours. I always hearken back to, I still do some clarinet teaching. I still have students, but I was a professional musician for a number of decades. And the most important thing I used to do with my students is to say I was I am a clarinetist, so I was a professional clarinetist. I don't do any professional playing anymore. But if I had a student and they were playing, say, a Brahms piece, and they started off the piece and then they looked at me with a quizzical look, I would do exactly the same. I'd look right back at them with a quizzical look. Then they'd look back at me, and I'd look back at them. No words, nothing. And then I'd say to them, what? You played the piece. You're here to tell me your story. It's not my story. I'm going to give you little hints. I'm going to give you suggestions. I'm going to give you historical context. I'm going to give you clarinet techniques. I'm going to give you all sorts of things. But it's your story. You've taken everything that Brahms has given you. You've given everything that I've given you, everything that you've learned. And you must tell your story so that what will happen is that you can turn around and say to me, I love the part where there's this elision that just joins this particular section. I'm never quite sure how does it sound if I take a breath here or if I take a breath here. I happen to prefer this one because you've got an opinion. And then I can come in and say, I like this one because it reflects better as an audience member that I can. You know what I'm saying? And that's exactly what must happen here. When you hear us talking about our techniques, the most important thing is that you've got to take the techniques and you've got to sort it out. That's why I always recommend when I'm showing my charts, I'm showing them right now. You can see I've got the left side is always the daily chart. This is the Dow right now. Leg C up, not a single sign yet of a turn down if you're looking purely at the price. But I study the internals, and my internals are saying leg C in the ChapmanWave is very strong. The stronger it is, and the further away you get from peak B. Peak B was right there on the 15th of January. 15th, that's days ago. 15th of January, 13,546. Since then, we've had a pullback, and then you've gone 1, 2, 3, 4. This is the fifth session, consecutive session of very strong, a breakout to the upside without a peak. Now, the day is young, but it has. We could drop 300 points. It makes no difference. This will still be leg C. Of course, it makes it difficult to say where will leg D be, and that's what you expect in the ChapmanWave. I'll go through that. But in the meantime, what I want you to say is we're looking at techniques. What this technique says, there's now the possibility of a high-level consolidation. In fact, I will draw this in. I'm being premature. I'm explaining right now. I'm not giving you the exact thing that I'm looking at, but I'm saying there's a chance. Do you know that stalk leg formation that I talk about? We've had the ChapmanWave falling axe. Now there's a chance that we might get the stalk leg formation, whereby we go into a trading range with the upper range around about 13,900s. The lower range around about 13,650, or maybe even 13,680. Right now, the Dow's at 13,869, up 90 points. I mean, have you ever seen such a hated bull market? A mega bull. I tell you why I call this a mega bull market. Because on the way down, you can drop from 14,000 to 6,600, and we will call that a 52% decline. But on the way back up, it is 100% or more gain. There's a big difference between a 50% drop and a 100% gain. That's why when you take a loss, you know, I got to, there's another story. I'm into the stories. Oh, we've got callers waiting. I'll make this real quick because it's important. I have a good friend. He had bought Apple. Beautiful timing. A while back. I didn't even know about it. And then we were together recently, and he said, no, not recently. It was a little more than recently. And he was saying to me, Apple is it's going crazy. This was as it was going towards the 700s. He says, I must do something. So I said, you know what? If your gut told you to get in correctly, don't listen to anybody. Your gut is saying to you, take something off. So just choose the time. I forgot about it. See him a little while later. He said, you know what? I did get out. I got out at 680. I said, that's fantastic. See him a couple of weeks later, and I said, we're talking. He says, I did the dumbest thing. I said, what do you mean you did the dumb? He said, everybody was saying that Apple is just got to be part of your portfolio. Apple's going to 1,000. I went and bought some back. I said, what? You bought what? He says, yeah, I bought some back. I said, you didn't decide to do it. You listened to other people and you did it. I said, get out. He says, you know what? If it rallies, it had gone under 505. He said, if it rallies again, I'm going to get it. I said, well, I think it's got a rally coming up. So you think about it. Well, he's very busy. He never has time for anything. He usually puts in his stops or whatever it is. He never did. Last night I texted him about something else, and I said, by the way, Apple's down at about 465. He says, the next rally I have to get out. I can't believe it. He did a brilliant thing because he was using his own intellect. He's bought stocks for decades. He just knew what he had to do. And yet he started listening to people and he lost his focus and he forgot. I don't know if he forgot, but he didn't put in his stop. I bet he's taken the profits that he had and he's whittled them down to very small profits. So this is not good. So what I'm saying is that your gut is really important. Take a little bit about what we're talking about and put it together. Let's go to our first caller. We've got Ari in Arcadia. Hi, Ari. How are you?
Well, Basil.
Good.
I liked your voice. It's sounding much better.
It is, I know. When it's so low, you know what? It reminds me of when I used to be clarinetist and bass clarinetist. So when I played bass clarinet, it's a real low instrument. I love it. Bass clarinet always is fabulous, especially in Strauss's Don Quixote. Some beautiful passages for the bass clarinet and the tuba. Anyway, I was thinking, that's not even like a bass. That's more like a contrabassoon. If anybody's heard of contrabassoon, you can hear each vibration. You can actually count the vibrations. All right. Ari, what would you like to look at?
V-A-L-E.
V-A-L-E, Valley. Okay, let's go.
But I see you don't have any marking on.
Man, I tell you, I did call Trade Station a little while ago about something else because I wasn't happy with my white charts. I wasn't happy with the candles. I'm going back to the ones it's called, what is it called? It's called, probably not going, yeah, it's called Candlestick with Trend. And what I wanted is the candlesticks themselves, I wanted them to be outlined, and they're not outlined. In this case, they are outlined. And I will be calling because the person that I'd spoken to some while back, who was the only person I've ever spoken to who understood when I say I lost my charts, but they're there, he understood what I was talking about and he explained something to me. He'll be there this afternoon. So I'm hoping later today I'll be able to talk to him. You know that I've done Valley about, I don't know how many times, so it's there, but I haven't got it. But in the meantime, it doesn't matter. You know, I can do it in a split second. So are you in it?
Yes, I am. Can we look at the weekly on it, though?
All right, let me give 1 second. I'm just going to quickly put in 1, 2, 3, 4. Yep, it's made a peak in the monthly. It's made an arch formation, and this is the second time it's proved that it loves the 200-period exponential moving average, and it's trying to bounce off. The technicals are starting to improve in the monthly. Now, the weekly, this is the tough one. I looked at a chart like this. It wasn't Valley. Now, what commodity Valley is in what?
Everything in Brazil. They even own the railroad. They own the electric companies. I mean, they are minor, but they own the smelters, the railroads, the ports. They are totally integrated, but the metal.
Now, okay, because we used to have Sam, who used to be here in the den, and Sam used to always be talking about Valley here, and a couple of other people used to trade this all the time. So, of course, I have notations on this all over the chart. I don't think I've ever owned it in my newsletter because for some reason, it moves so quickly. By the time I looked at it again, it's already done that. Now, this is a big question for me. I'm trying to, in my mind, place the chart that looks. I'm going to try to get to SCCO. I think SCCO had the same kind of chart pattern.
Probably would.
Okay.
Similar industry.
Okay, SCCO. Just real quickly. No, it's not. It's kind of, actually, it's what you would like Vale to look like, or Valley. Do they pronounce it Valley or Valley?
I don't know. You pronounce it one way, I pronounce it the other way, so I just say Vale. I really don't know, Baz.
Because I think, I believe that I used to call it Vale, as if it had a French E at the end, or Valet, but I don't think that's right, because I think that I've heard people say Valley. So, in the meantime, this is called a Valley SA. Wait, they are, where is the headquarters?
They're a Brazilian company.
They are Brazilian, yes. Okay, good.
What happens is they sell to China, and they're one of those companies that exchange, and they don't deal with the U.S. dollar anymore.
Oh, okay.
But they're an inventor of other people since they deal with China with the Chinese currency.
I see. Okay, I'm going to do, you know what, I've already done the notation on this, but there's something else I want to do, and I'll be back with Ari, Mark, and Jerry Vale.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we are looking at Jerry Valley here. This is, in fact, Vale Mining Company. Portuguese pronunciation is Valley, and the full name, Companhia Vale do... so it's Valley. Yeah, Valley do Rio Doce. A Brazilian multinational diversified metals and mining corporation, and that's all it's got there. And then it said something about Bungie, BG. Well, I looked at BG over the weekend. No, I looked at it late last week, and then I followed up over the weekend. And BG has had, talk about a rocket ship. It is just an unbelievable move to the upside. So once you said Valley, I thought to myself, okay, let me see. I haven't looked at it for a little while. I must tell you that I'm a little disappointed in the price action as I see it right now. Most importantly, the weekly chart, and I spent a little time during the break trying to get a sense of the left side, the right side price, time match. Why did it go to that quick peak at the top then, almost like an island reversal on the 2nd of January from 2188, and then pull back? So this is what I'm going to recommend. I don't want to change your concept of whatever you've done to get into the trade, but have you been in it for a couple of weeks, or you just got in?
I'm short.
I'm what?
I'm short.
Oh, you are short. Okay, I didn't know that you were short. Because what I wanted to say is I see the upside is very limited. It's unlike most of the others in this whole sort of commodity material-related area. So when I looked at it, in a way, I was only surprised that some of them, like Bungie, Kenji has had a spectacular move, but they're in different areas. But I kind of lump them in my mind. I put them together. So I can tell that the way the 9-period exponential moving average from that big spike up, the moment it broke under it on the 7th of July, that 9-period moving average, together with the MACD, the fast moving average of the MACD, and the flat stochastic is saying to me, upside is extremely limited. Even if it was successful, my guess is at 20. You don't want to be here in case it goes over 2188. Well, no, that's not bad. But you don't want to be there if it gets into the 2230s, because then that 200-period moving average at 2338 becomes a target. I'm looking at this as arch failure patterns. And that if on today's Thursday, if by Tuesday afternoon or Wednesday at noon at the latest, it is not punched through 20.49, the high of the 14th, together with the fact that I'm getting real close to some kind of consolidation in the market itself. Let me just have a sip of tea here. I'm suspecting that you don't necessarily at this particular point have a big play to the downside, but based on the weekly chart pattern, you see that little sort of like an ABC that it made from that peak A top on the week of the 14th of September.
Yeah.
I suspect we've got something like that here. So this is what I'm looking at. There's a chance it'll go under the 9-period moving average in the weekly. Go to it's at 20.04, VALE, up 10 cents. I suspect it could come down to $19.40 to $19.21. A little bit of a bound to rebound to test the 9-period moving average. Maybe close above it 1 week. But I would not be surprised if over the next 3 weeks, this makes lower highs and lower lows, and it'll really start to drop if it breaks under 19. If it closes on a weekly, this is the weekly chart. If it breaks under 19, then it's going to tank. But my suspicion right now, I would probably say to you, it really needs to break underneath the low of the 16th. That's at 19.73, and it needs to do it really quickly. Because if it doesn't do it very quickly, it's in this trading range. It's going to just bounce around, and I suspect towards a 20.50, down to the 19.50. I think it's in this wiggly room. It has the look about it in the monthly chart that at any moment it could have a very ugly candle. And that ugly candle could take it to test the low of 16.92. That's the week of the 16th. I think that's what you're kind of looking for if you're looking for the downside, right?
Yeah, I was thinking of changing reverse at 1880.
At 1880, that's what you think it'll go down to 1880 and then have a stronger bounce.
I was thinking 1880, I'll go long.
Yeah, that's part of the pattern that I'm looking at, but I suspect that at 18, if it gets to 1880, it will have dropped quicker and faster. But that would be the time that I'd be looking at saying, okay, is this a counter trend rally I could play? I just think it's in a big trading range, and the trading range is going to last for a little while longer. But the downside, I agree with you right now, the downside looks to me like it's going to make lower highs and lower lows. Hope that helps you.
Thank you so much, Pat.
Thank you for calling, Ari. We'll be going to Mark in Denver straight after this break.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Let's see. We're going to go to Mark right now. Hi, Mark. How are you?
Good, Basil. How are you?
I'm very well, thank you. You wanted to look at?
Yeah, I'm one of your subscribers, and I have been toying with the idea of shorting one of 3 stocks, and I'm kind of maybe even a little bit of each. And I know we've looked at them before in your newsletter. Whole Foods Market.
Right, WFM.
Chipotle, CMG.
Right, CMG.
And AZO. And they're all looking like they're pretty close to a spot at which they might be a good risk-reward. But I wanted to get your thoughts before I do anything.
Oh, I'm pleased you called, because you'll notice that I've just been avoiding. We had that real nice trade just recently, another one on CMG, adding to a real big win in points on CMG Chipotle. And then I just stayed away. I said, I think we'll be back, and I've stayed away because timing is absolutely imperative in this market on the short side. It's funny, it sounds like it's wrong that you've got stocks that are acting weak, but in the rotation. See, this is so important, and this is what I needed to see going into today. And one of the reasons why you'll notice in my opening call, this is one of the greatest numbers that I've got on one side for a long time, 6 long positions, and all of them are actually working real well. And in fact, the one we just added yesterday is up about 1.5%. So my thinking is how can I put it? For the years of experience that I've had, when I get that sense that this is what I call that stalk leg, the buying fervor,
Right.
I don't want to get in the way of it in my thinking.
Right.
Even if I might be selecting a stock, for instance, we were short Boeing. For a number of reasons. It wasn't technically all that weak, but my suspicion was that once I thought of it as the SEC, that once the FDA starts to say, oh, now we're going to look at it, it's going to take forever. It's going to be very disappointing. And, of course, eventually Boeing will get it right. They're an incredible company, and they've got all the people to work. There should be no problem. But I tightened up the stop. So we took an 80-cent loss on a $75 stock. Right. No big deal. And the reason why I tightened the stop is I've spoken about this for 3 summers now. What I've been saying is there's a characteristic of this market which I don't recall seeing, or maybe I wasn't quite as aware, but I think I was aware. I just don't remember it quite so vividly. The rotational aspect that fund managers seem to want to go to something to buy, especially if they're the previous laggards. And now, look, all of a sudden, the 3 stocks you spoke about, AZO is making a U-shaped formation, stochastics improving, MACD's improving, the monthly chart still doesn't look that good, but we have to go to the middle one, which is the weekly chart. AZO is AutoZone. Well, it turns out it's at a high-level consolidation. And if it manages to rally, it's a 359. If it manages to rally into the 367 area, somewhere in the 365 to 369, maybe 373 area, there might be a chance to reshort AZO. Chipotle, CMG, Chipotle, Mexican Grill. It's not the same pattern. It's a far worse pattern. But
you might be able to get up to that just flip over that 306 number. And that would be a good time on that, like 307-ish.
Right, because 306.73 is on the week of the 4th of January was peak C. Right. Well, this could be one of those very quick, very small in points, trough to A, to B, to C, and then it makes leg D, and we can start looking at it again. Why? Because there's tremendous. This is where I do believe you need to look at volume, because the volume on the downside says, hey, it happened so quickly and people were so determined to get out that you've got to now allow some kind of upside action. Well, 8 or 9 or 10 weeks to make a peak D, that says to me, could be ready. So I think you need a little patience. Let me have a little tea.
Okay.
Okay, there it is. I think that that turnaround the other day, the day that we took our profits.
Right.
It went down to, it was amazing, it went down to 266.02. It just didn't want to hang around there. And then it closed all the way back, right, at 283, had a beautiful candle the next day, and it's had beautiful candles. And the doji candle of 2 days ago, with the wide-legged candle of yesterday, says if it closes 2 days above the top of the wick, this is my own interpretation of candlestick charting, it says, be careful, because even if it was to dip into the body of the candle, that would be at about 294. Is that correct? Yeah, about 294. It could have one more pop to the upside. That all fits in together. So I'm saying, I like the fact that you have the patience. What I'm going to do now, if you don't mind me having another sip of tea there, I have a little patience, and I'll tell you what I'd be looking at. In CMG, because I believe that the auto companies have turned around, and people are buying more new cars than old cars. While they were buying old cars, it had a spectacular run from 36.86 back in 2009 all the way to 442.40, made a doji peak F at the top with a round number open of 417. Pulls back to 233, so I'd say give it a little bit of room, let it go to the upside, and then we'll see. And then I'll still probably wait a couple of days to see if it actually can hold a U-shaped, an arch-shaped turnaround.
You were just talking about auto stuff. This is CMG's Mexican Grill.
AZO, I jumped. AZO is what I meant. I meant to talk about AZO. That was the CMG, of course, is Mexican Grill.
And then what about Whole Foods?
But now you see,
is a good spot.
I'm going right there. But first, I want to go via Panera.
Okay.
Panera was on my list, and when I saw the guy yesterday, he's just been a genius. I can't remember his name, the CEO of Panera. He's just a fantastic chef. I think his name is.
Too much to short that one.
What? Well, that's me too.
Much to short that.
I haven't been for a while, but I happen to like it. It's just quick and easy and nice. I love the food. So, but when I heard him talking, now they've got this whole thing going on, which I think is just fabulous. But as a business, I'm not sure people pay what they would like to pay. When things start to get tough, they will be paying a lot less. So I think they've started on a track that I'm a little concerned about. So my eye is now going to be more on Panera, on the next rally in Panera, if that's the one, rather than CMG, because CMG has been hit twice already.
Right.
I suspect that we might have to give it more room, that it just goes into a little sideways trading range like Sears Holdings often does. Gets smacked, and then it just does nothing for weeks in a trading range. And then, boom, gets hit again. So here's my thinking. So the other one was Whole Foods. Now, I'd said before, just going into Thanksgiving, I said, I think there's something wrong with Whole Foods. I got two just nearby. I sometimes go to the one in Manhattan when I'm there. I always watch wherever I am. I look at traffic, and then I said to myself, are you crazy? They are so brilliant at what they do, and there are people. The bigger the counters they make for prepared food, the more people there seem to be. And that's their markup. I mean, that's where they're getting profits. So I'm looking at Whole Foods and I'm saying, you know what? I think there's going to be an opportunity, but I need to see it in the monthly chart. And that monthly chart says, hey, just hold off right now. The daily chart is in leg D. I'm watching it real closely. It is getting to the point that says to me, it might not be a major short, but I think there's going to be money to be made on the short side if I get a signal in the next couple of days that says that Whole Foods market, WFM, which is trading at 94.70, shows signs not just of a reversal, but that this rally in the daily, which has gone from the 87 level to 94, that's pretty big, 47 points.
Right.
If that's able to hold, then I'm going to watch for that H pattern that becomes an M pattern, and at some point I think we're going to get that real big smackdown. But I'm not sure yet whether I can write it off because it is the leader in the field. There's a lot of competition, but boy, they are very clever. I mean, and their markup. I mean, I go everywhere. I go to Trader Joe, I get a bag. I go to Whole Food, I get a bag, and there's like a $70 difference or something.
Right,
maybe it's the things I buy. I don't know, but boy, they really do charge. So I'm looking at Whole Foods and I'm saying, they've been brilliant to this day. The 9-period moving average of the monthly chart is held on the dip. I don't want to be early. We've managed either to take tiny losses or a little profit. At some point, it'll be the right one. I've got it on my list. But you know what? There are a couple of other stocks and stock areas that I'm starting to look at that are showing the kind of weakness that says, you know what, if we rotate, they might not be the former winners and they could become the laggards. And that's what I've been talking about. This rotational market allows other areas. I even said it in my opening call today, in my Traders Corner, that we will see. We've got ISRG and Netflix on the upside, huge. You've got Mellanox and Apple on the downside, huge. Of course, Apple's the biggest weighting in the Nasdaq, so it did affect it. But it's very interesting that you've got this rotation. I looked at ISRG and I thought, I don't think the earnings are going to be good, but I needed to stay away because it has a way of surprising, and when it does, it just blows the numbers away, and that's what it did yesterday. And that is like an economic barometer, because if people are having more the robotic repairs, the Leonardo, what was it, the Da Vinci. They've got the ball joints, they've got all these sorts of things, and the technique that they use. That says something about the economy. So it's a very interesting thing. So I'm like you, I'm anxious. And what's so nice about these, really, the reason why I've loved the high price stocks to look at them on the short side It's because I don't need 10%. I don't need 25 points. I just need 3 points as a buy stop.
Right.
But when I'm trying to short the lower price stocks, it's so hard because a $23 stock and have a real quick pop, and then you're out the money, that same $2-3. So I'm being careful. We'll see what happens. I suspect I will start to include more of the shorts again.
Okay.
You know that I'm expecting leg D in the Dow. We'll have our opportunities.
Okay.
Meantime,
hey,
the upside.
in one of your next Traders Corners, will you maybe take a look at the XLE, the oil sector? That looks like it's getting ripe for a downturn.
Well, it looks like it's getting right for something, but let me tell you something. This is only leg C. The XLE is in leg C. It's in leg D, and it's about this leg D. If I can tell you right now that if it takes out 77.35, this is the XLE, the S&P Select Energy Sector. If it takes out the left side high of the 14th of September, that's an overlapping wave that takes you to a very strong leg D.
Okay, so
then it comes back and tests the lip. So it'll come back into the 76s, but it makes the monthly into probably leg C with a very good chance of trying to retest the high of 80.90 made in April of 2011.
Yeah, I was looking for a failure of the 77.35 first, so we'll see.
And you've got the USO. Now, that's a different one, because I did some work today on the USO and the SCO. The SCO is
one's just oil and the other one's the oil stocks. So.
The one, right. Yeah. And so the USO is oil, and the SCO is on the
short side of the oil.
On the short side of oil. Now, the OIH is the oil sector itself, and that's in leg C.
XLE is more like the refiners, and the OIH is like the refiners and also the people who
oil
do the infrastructure. Yeah.
Right. So, and they are saying to me, monthly chart says, yes, there will be an opportunity to short those. But in the meantime, the weekly chart is just trying to get back. It's the OIH is at 42.74, and I suspect it's just trying to get back to it's very close to the 43 area, and then we'll look. So, yeah, you can tell, I've got my eyes on both sides, the short side and the long side. Meantime,
okay, thank you.
Thank you so much for calling. I appreciate that, Mark.
Bye-bye.
Bye. So, we're looking, folks, this is important because I've been trying to have a split personality in my opening call. I've been trying to have shorts and longs. For a period, it was working very well on both sides. Then all of a sudden, there were more longs. And now I had the one short, which was Boeing, took an 80-cent loss. And I'm saying to myself, the only obligation we have is that in the ChapmanWave, when we get to leg D, it might be E, but when we get to around about D, if the technicals are showing signs of at least a somewhat sharp pullback, our obligation invariably is to buy the DXD 200% short. Even though we're keeping our longs, it's more insurance than anything else. But once I drew that pattern that I did earlier on, let me just quickly do an overview because I did not do it, and there were a couple of people that asked me, and an email came to ask me if I would do that. And thank you. One of our listeners sent a whole thing on Valley. Company, Brazilian multinational, diversified metals, mining, yep, just as electric energy. I remember now, they're in everything. So I'm going to do this. I've drawn in that circle, that oval pattern. In fact, you know what? I'll do all my drawings. I'll get them all done. We've got a break coming up. I'll give an overview as soon as we get back. The Dow's up 86 at 13,864. The S&P's up 5. A little bit of a laggard there, huh? At 1,500. And you've got gold down $15. Silver's down 59 cents. Crude oil is up. It's unch. And copies, it's up a little bit. And bonds are down 17.30 seconds. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. We are back. So we ran those numbers down. Now, let me just do a couple of things. I have to tell you that I find it very difficult right now to fight the technicals that I'm looking at. My gut is saying, hey, we are due for a pullback. You're in leg C. Let me just do that. Let me show you exactly what I'm looking at here. I'm in leg C on this. This is what I show my subscribers every day. This is the five quadrants. This is the 120-minute chart. Made its leg D in the neck formation, and now at some point it should be pulling back, and that should happen within the next, by Tuesday afternoon, Wednesday morning. We should be having some kind of a correction. VIX index is at 12.59. 1229 was the recent low. It should get into this rectangle area right here. If it breaks above 15.20 by a week, by Wednesday or Thursday of next week, the Dow will be pulling back. I did draw the oval pattern. I'm going to go right there in a moment. What I'm also looking at here is, I need to get out of that. I need to go to right there. What I'm also looking at is that the bonds have failed to rally. They are stuck in a trading range. But we say stuck in a trading range. Actually, what they're really doing is they're making lower highs and lower lows. That's the TLT I'm talking about in the weekly chart. I'm very concerned that the monthly chart is saying, hey, I don't think I'm getting back to the 125s. I'm at 119.36, and that says to me that if there was a move in the stock market of significance, you will see the volatility. Well, first we go stay with the bonds. That bonds will rally, and the 121.64 will be taken out in the TLT. That's pretty key resistance, and we will find within 6 to 7 trading sessions by the end of next week that there's a very strong move up in the TLT. That's bonds, 20-year Lehman T-bond fund. That the volatility index, in fact, is starting to get back to the gap. The gap is right there at the 16 area. It's at 12.59 right now. And that the dollar, which has been kind of in the doldrums, breaks out and crosses 80.40, 80.60, 80.87, the previous high, and all of a sudden we're looking at the dollar in the 81s. Those are the three bears. Remember Vixie, Dolly, and Bondi, those three guys? Well, if they do rally, that's what we will see. But something tells me the way my four horsemen of the Dow, GE, IBM, Triple M, and UTX, the way they're acting, they're breaking out, they're going to. Triple M is at all, listen, if anybody said to you, you remember the headlines all the way down in the newspapers, day in, day out, headlines, earnings this and banks this. Triple M is at an all-time high. United Technologies, it's at 88.70. It is 3 points from an all-time high. GE, which has just been smacked, is at 22.09 right now, holding the trend line, doing okay, not great, had a nice earnings report. IBM, out of the blue, not a great chart pattern, and suddenly he makes this double cup formation. It's at 204. The all-time high was 211.79. Is that front page news? Do you read anything about it in the newspaper? Does anybody say anything about the recovery that's been going on? I think there's been a fantastic recovery. Look at the IWM. Small cap stocks. This is not just the end of the year, beginning of the year effect. This is an all-time high. IWM, 89.85. The stochastics at 84%. MACD's turning up again. I'm impressed. I'm just saying to you that I'm impressed to see the market really tank. I would need to see the three bears come alive and really take leadership and hold that through 2 Fridays. At the close of each Friday, higher highs in those three indexes. So I'm going to hand you over to Larry Pesavento, and it should be a wonderful program as all. Listen to all the programs this afternoon. I'll be back tomorrow. Have a great afternoon. Thanks for being here.